right, what's going on, everybody? It is Modern Micro. We are back with another video. Um, been a little bit, been a good week or so since I've, uploaded to the channel, but you know, I almost feel obligated to, right? I was gonna make a video regardless of how things turned out, either green or red. Down 10% in the portfolio or up 10% in the portfolio. I was gonna do a video regardless, right? And so I'm in a much better mood. I didn't just wake up, long day of school, and in anticipation to this announcement. And you know what? Here we are. I mean, we're up 2.34% in overnight markets. Um, and after I'll speak more about this little hedge that I did, but after I'd say not even I'd say around 2 p.m. When I didn't see any sort of volatility in the overnight markets, right away, I'm like, I was thinking to myself, you know what? I shouldn't have bought protection. There's no need for protection. I think ultimately, you know, right here at this end, this is where I bought the put. Right here at 12:40, 12:35, I was thinking to myself, I need some sort of hedge, right? I don't know how this is gonna go. And then I kid you not, 10 minutes later, we get a pump, and I didn't think it would hold, but then it continued, and that was my telltale sign. Like, I think this is gonna end up positively, which I am a lot in the overnight markets, but this still kind of kind of pisses me off a little bit that I was the exit liquidity for this guy right here who sold me this put. But it's all right. It's all right. I'll get to it more. I'll talk about it and my thought process behind it, and I'm not mad about it. I would do it over again, 5 times over again. But up 2.35% in the overnight markets. How'd we get here? And it started with, it started a little bit before this. There was rumors about Iran liking the proposal and having good talks of the US's proposal, and not necessarily being so um, put on their 10 proposals that they had offered before. And so we see this now here. Iran has reportedly accepted a 2 week ceasefire proposal. Ceasefire was approved by the new supreme leader, right? And I'm not gonna get political, but ultimately, 2 week ceasefire, Strait of Hormuz open. Um, you know, it is a bandage, but ultimately, if we know from the tariffs, this type of thing gets resolved within the 2 weeks, or it just gets punted out months on months. We've seen that in the tariff debacle where, April was the deadline, April 7th, when your anniversary, or April 6th, sorry, April 6th anniversary, and then it was kicked out until May, and then you still have the looming, bears coming out and saying, oh, as soon as May comes, as soon as this happens, we're going to fall, 1,000 basis points on the S&P 500, or whatever the case may be, right? Like, ultimately, um, there will be a wall of worry, and if I'm being honest, I'm not gonna be the most optimistic today, just because I do feel as if we are a little bit overbought, and that's not going into the actual volume, but rather just or any sort of RSI indicator. I just Going back to the NFP system, we are looking to have some sort of step by step process, something where we know where we're gonna head and what's the next level. And I think we are a little bit too far ahead of ourselves. And so that doesn't mean I don't think the 670 will hold, or I think we're gonna fall back down to, what was it, 650s, 660s. Um, I don't think that at all. I think this is a fundamental change, but I just want to, be careful, and help y'all out as well, knowing that it's not rip face back up to all time highs. And if it is, I'll invite it. I'll 100% invite it. But it does get a little bit more complicated than that, and especially since this is a 2 week thing. Back in the tariffs debacle, that was again a 1 month, 2 month extension, and temporary, fixes that didn't really, it didn't it kicked the can down the road enough to where, what, yeah, let's push for all time highs, let's keep on going. And that's when we seen this V recovery, um, all the way up until October, where we had 6 green months in a row. And so here we are holding 674.66. And I had a put credit spread open from my last video just about a week ago. All right. About a week ago. And I had closed that out earlier. And the reason I did that wasn't because I was scared. Here's the put credit spread that I had closed. I still had roughly, it was 4 contracts, and I had, if you do the math here, about $54 on each contract, and I closed them off. I closed them out early just because, and I left $200 on the table, nothing too crazy, but I closed them out early because I wanted to do exactly this. Ignore these SoFi puts, but actually they are related a lot to this. The margin collateral that I had on my account was getting really tight. You know, did I want to squeeze these put credit spreads into volatility where I don't know, where there's a coin flip in, what's gonna happen? Ultimately the charts told me one thing, but I still had, no clear idea of what was going to happen. You heard both sides, and there wasn't anything indicative. The bond market wasn't breaking. S&P 500 just 9%, or NASDAQ just 9% off of its highs. S&P around 6%. I felt as if we wanted to go lower, we would have gone lower. And so I closed these out, and I just wanted to, accumulate more shares of my long-term positions. Not only did I do that, but I also closed UEC here, some call credit. Wow. Oh my gosh. Covered calls that I had on my entire portfolio, or entire SoFi position, which is almost my entire portfolio. And again, left $200 on the table there. Closed them at 8 cents. Luckily, if we look up SoFi right now, it would be around 17.25 or so, and I would have to roll these out a couple weeks. So I am glad I did this. And so moving back closer to the put credit spreads, my margin collateral was really tight, and I didn't want to deal with that. I just wanted to, use the cash that I had on hand, and make the most out of it, because I feel like there was, if this wasn't the near term bottom, we're close to it, especially since seasonality, as I touched on last video. April, May, June, those are typically up months in a midterm year, and we don't see volatility until closer to the eating season, and going into the eating season, where we would eventually rally into year end. But I want to be prepared for that, and so I did exactly what I am saying. I bought 50 shares of SoFi at 1506. Moving forward, that was on Friday. Moving forward, or Thursday, sorry. Moving to Sunday afternoon, where the overnights market opened. SoFi was down. I think it was down as much as 4%, but I didn't time the very bottom. I seen it jump, fall back a little bit lower, and the same thing. I was like, we typically, if we are red in overnight markets, Sunday markets, Monday or Tuesday within the next 48 hours, that gets resolved and we figure things out. And so that's what I was expecting. And, ironically enough, that's exactly what happened just that same day. We were down just as much as, 0.6% on the NASDAQ, I'm pretty sure. And we just came all the way back up. So scooped another 50 shares at 1587, about an $800 buy. And then that same day, I did another 100 shares at 1581, roughly $1,500. And so I was prepared going into Monday. I didn't have any expectation on what was going to happen Monday or what, you know, was going to unfold. I had no clear idea. All I seen was crude oil at 115, 114. I don't think we're going to, sustain that. And so if that were to go lower for whatever reason, right, the stock market will rally. Inflation scares fall down, interest rates, the bond market slows, decreases, and the possibility of rate cuts are higher. Hence, more appreciation to SoFi Technologies and the underlying stock. That was my thought process, and if the bond market wasn't screaming then, it definitely would have been screaming if 116 sustained itself, and I would be buying more. Um, and so when I seen oil so high, yesterday, yeah, now April 6th, I had shorted and did a little bit of a trade that I should have held. Truthfully, is a VG short sell, liquefied natural gas. This thing has rallied. Let's see if I could open it up. I don't think I could. But this thing has rallied up until the 1650s, and we see here I did that again today. But I'll get to that soon. And the thought process was just short oil. That was my only way of shorting oil. USO, I didn't feel comfortable, or next decade, I didn't really want to. I just knew that Venture Global is on my radar and has been the stock that has moved up and down in correlation to oil prices, and I thought it was a little overheated. Alongside that, I had bought some Robinhood shares at 69.81, 15 shares. I went shopping, guys. I went shopping these past 2 days, and I am really happy that I did. And then another 10 shares at 69.76, about $700. Rocket Lab is a buy and write strategy that I did, and I will go into that. Rocket Lab is a buy and write strategy that I did. I had made a killing on Rocket Lab earlier this year, writing it from 45 all the way up to $100. Sold out most of my position at around 80, 85, about an average of 80, 85. And I wanted to get back in, but not at the expense of going down to $40 a share. So, if that were to happen, my thought process was, hey, if we go down, I will collect a little bit of premium and write this ship down, right? Get my average cost lower, and if this pumps and I wrote the strike at $72, I could always roll. I'm not scared of rolling. I'm not scared of monitoring my covered calls. I did it all throughout last year, through January and through April, and all the way up until October with my full portfolio. I did it then, and I'm not scared to do it now, especially on a smaller piece of my portfolio. It won't do anything to the portfolio. It'll only have it appreciate it more. The premium and the calls that I wrote, not substantial, right? $72. I was buying here at 65, right? That's a 10% move to the upside. If we did get that today, we're about closer to a 7% move. I can roll this out a month and hold the underlying, because I know this will not fall below 60 now. The fundamentals of the market structure has changed, and maybe SpaceX can flop, right? Maybe Um, you know, CPI comes in harder than expected, but I don't think Rocket Lab is gonna fall anywhere close to below $50. I think it's a easy pickup. I think it's a $50 billion market cap company right now, sitting at 35 billion. And you know what? If I'm getting taken out at 75, 80, so be it. I had my fair share of this company. I was overweight it a lot earlier going into this year, and I'm glad I was. But just a little buy and right strategy, and wheeling it. Um, and then Venture Global market short sell again. I shorted at almost the high of day, at 1685. I believe it was very close to it, 1685, and I capitulated. Not. It definitely would have benefited me if I held this until the close, but nonetheless, little $20 paid for my lunch today. Had some In and Out, amazing, you know, best burger you could ever get. This is why I love California. Um, but paid for my lunch, and I can't complain about it. Robinhood bought 25 more shares today. I don't I don't even know what I was thinking. I was uh, balls to the wall. Robinhood 10 shares at 67.77. After that was near lows. I wouldn't say at the lows. The market was definitely down, but not at the very low. And then the 68.63 purchase was a chase. I'll be very honest, 15 shares. It was a chase, but I did want to build out that position as much as I could. If this is a near term bottom, I do want to make sure that I do have my positions intact. Robinhood sitting at the highs of 130 was very overheated, but I think it's a very very safe play. As much as the volatility kills, with the crypto underlying connection, and market, and the fundamentals being tied to volume and traded on the platform, it is risky it in that extent, but I just know it's just so obvious to me that they are a clear winner. Um, so did that, did the buy and right on Rocket Lab. This is a $72 covered call expiring April 10th, this Friday. And then I had my SPY hedge. You know, I got in at a very bad time. I'll be very honest. Um, but this was to go to zero. This was expected to go to zero, and my portfolio is up a lot more than the $300 that in theory I lost here, and I'm not too worried about it. I mean, you know, I learned that earlier this year when SoFi was cut in half, Robinhood was cut in half. Um, that having hedges are completely fine. I will I always refrain from them outside of selling covered calls on heated uh, stocks. But I learned over time. I In any sort of portfolio management, especially in a concentrated one, hedging is gonna be your best friend. My portfolio consists of four stocks. It is Rocket Lab, it is Bitmine, Emergence, you know, Ethereum underlying. That's not the safest play at all. It's a very volatile um, investment. And then wow, Robinhood and SoFi, which have both been cut by over 50% this year. Um, it doesn't hurt to to hedge, and I have brought in a lot of premium in doing so with covered calls. But I think I'm gonna take this approach more when it comes to big fundamental events. An FOMC meeting turns hawkish, and that'll absolutely kill Robinhood and SoFi, 100%, especially SoFi, a company that's 100% tied to private credit and refi. I mean, that is the pinnacle of risk when it comes to any sort of monetary policy. And so that's what I did. I was really busy. I was buying a lot. I went on a shopping spree, but I'm glad I did, and the portfolio is really looking a lot better. And so going back to what I was saying earlier about, I think this market is very overheated. Uh, there's no RSI level that will tell you this. There's nothing to tell you that, oh my God, this is, going to fall back straight to 650s. But what I am telling you is that there is expected to be some sort of back test. And what I mean by that is on this 4 hour chart, using the NFP data, I have not put in the April NFP numbers. I will have to get to that soon. But we see here, oh, before anything, watch my previous video and just I'm not a fortune teller. I don't know what's gonna happen in the future, but I told you so. I told you guys. I told you guys right away what was going to happen. This downtrend channel looked good, right? And we had, I believe this is where we broke off, right here. This is where we broke off. Let's look at the daily candle of where we broke out. Daily candle here, we broke out. The next day, pivot. It was, a inside day, really, really choppy. And then we had some downside pressure that was bought up immediately. What I had seen on this chart was exactly this. I anticipated some sort of breakout and retest on this downtrend, on this down channel. And it's not the cleanest. I said that even in the video. It's not the cleanest, but expect some sort of pop, retest, and a lift off. If this were the true bottom, that's what would have happened. And so that's what we got. I mean, we had this pop, break here on April 1st, retest on April 2nd, and that was almost to the penny of the September 2025 NFP low. Almost, not really to the penny at all. We had about $1 separating the price and the level. But as close as you can really get to that September NFP low, bounce all the way back up. I believe this was intraday. I don't think, this was all intraday. We had this break and retest almost to the channel. I don't want to credit the channel because it's not the cleanest. But if you're just looking at the NFP levels, look, this was very overheated. Then, we took a breather. And then we retested a level that we were below for a little bit. Retested it, didn't want to go any lower. So this marked the lower low, and then we jumped back again. Lower high, right? Or a little bit of a higher high, but, not really anything too substantial. Could definitely fall lower. But again, lower low. And this is what happened. We had a retest of this level, this September NFP high. Didn't want to go any lower. Didn't want to be in this range. So where are we going to go? And learning and understanding the NFP levels, going back to last year, if you break a level, you can't find any buyers inside, below, you're going to go higher. And, today really showed me that. When I had seen us break below 652 on SPY, I got a little worried. You see this little flash crash here. I got a little worried. I'll be honest. I did not think that was really that this would hold, and maybe it'll come back up and then flash back down, and then whatever happens after. But when I seen 652 break, I was like, okay, hold on. This caught my attention. But the immediate pop afterwards, it wasn't immediate. It was within an hour, 2 hours. But the strength that the market had today, and going into the close as well, the strength. that really showed to me everything that I needed, that we were gonna go higher. Yes, I did put on protection, but it wasn't. That was just simple portfolio management. The reason why I was doing all this buying is because here, after we had jumped on the 6th and on Thursday, we had jumped over the September NFP high. I knew that you know this was a near term bottom. There was no way, unless there's something catastrophic, which this could have been catastrophic, we were gonna go higher. We were just gonna go higher, and as a result, we did. But as we see here, went straight to 670, no problem at all. No resistance here. Straight line up, God candle. But I said 670, not 675, which is this December range. And so what I expect to happen is, not a straight line drive. Let's go back to the daily chart. Not a straight line drive all the way up to 700 S&P and 7,000 SPX. But what I am anticipating is something. There's no extended hours for this. It's something like this, where we got overheated, will likely open, you know, around 665, 670, maybe even hold 670. And what we'll see is, well, look at all this resistance. As much as I want to be bullish and I want to say all-time highs by the end of next week, we have all these levels here that we were just chopping through for the past 4 months. And now we can't go back to the daily. If we're up here, what is all of this going to do for us? That is a lot of people's entries, a lot of people's exits. I don't think everybody here will capitulate. And maybe they do, but not in an orderly fashion like how many people anticipate this will be. Again, the ceasefire was only for 2 weeks, and I think I would be cautiously optimistic here, right? Maybe we can see a jump all the way to 695 all-time highs, but I see this more as something where we're just gonna jump in here and do this again, chop around, and that's no different. That's completely fine. We see, where is it? We see Nvidia, right? Nvidia on the weekly channel, it has been chopping around for the past it's been 8 months. 8 months Nvidia has been at this level of between 165 and 210. 8 months chopping around. And yeah, this does look really good for Nvidia. This actually looks like a microphone here. I'll have to look at that. But ultimately, this looks like something that I anticipate for SPY. We had capitulation on the bottom. We had record volumes, as we see here on the volume profile. Huge capitulation here near the bottoms. And, shorters return their stock for a lot cheaper than what they got it here. But again, this is a fundamental change. And so if we see some sort of, chop back and forth into this range, and then we propel closer to, eating season near the end of the year, I'm completely fine with that. This is a staircase. Ultimately, this is a staircase. Boom, boom, boom. If we, step around here, that's fine. That'll be completely fine. We see stocks like SoFi. And we'll look at SoFi right here. Where is it at? We see companies like SoFi that here. Let's look in a bigger time frame just to make my point clear. Cut by 50%, highs of 32.73, back down to right now we're sitting at near 1730s. Overnight has us at 1720. You really think this company is just going to fall below? I, that's why it was hard for me to really see this breaking down any further. It's not the fact that okay, yeah, we're only down 9%. That is something I said, but the fact is that we had rotation. You know, private credit was dug to the ground. Financials were shot. Um, a lot of tech was thrown out the window January, February, March. Tech was has only been leading for 2 weeks, guys. 2 weeks that tech has been leading. And that's not to ignore the fact that the energy sector, XLE, was up a, more than it has been the past 5 years. XLE, I do want to look it up, but here, let's just look up XLE here, replacing TLT. XLE, guys. What are we talking about here? What are we talking about? If we're not talking about sector rotation and market rotation, what are we talking about? I know XLE is not a big part of the S&P 500. I know energy is a really small part. But when you have this happening, right? It's only a matter of time until there's some sort of rotation. And I think this is where we're at. You know, I think Nasdaq will outperform going into year end. And I don't think that's a really crazy thing to say. I think that's a very logical outlook. The tech sell-off has been insane. Absolutely insane. Nvidia chopping for 8 months. We already looked at that. Meta selling off over what is a court case, a little $300 million court case that could result into class action lawsuit. But what gives? They do insane amount of revenue. Nobody is leaving Instagram. Nobody is leaving Facebook. There's still a hype. They're doing their thing as a hyperscaler. Is expanding. Have one of the best CEOs of all time. Meta isn't going anywhere. Meta has been sold off from 800 down to low 500s. I believe we're in the 400s at some point. Yeah, 478. 478. Oh, that was last year. We were at 520. The lows of 520. You see these spots? This is where I was trading put credit spreads on Meta last year. Like Meta being sold off this much, about 10% off of its tariff lows after a year of earnings. We're gonna sell it off that much? It's the cheapest Max 7. We go on and on. Microsoft, Google. Google's not too cheap, but Microsoft has been sold off. You know, Amazon at its lowest forward PE ratio since almost inception. Like, what are we doing here? And I don't want this to be a rant video, but you know, things are cheap, and when things are cheap and the S&P 500 is down 5% year to date, let's just go back to Robinhood here. Year to date, when we're oh my gosh, we're down 0.45%, 0.5% on the S&P 500 year to date, and we have companies this cheap. The top 7 holdings of the S&P 500 are this cheap. Ignore Tesla. All these companies are cheap, and we're thinking, and we're bearish. There's no chance we're bearish. We had sector rotation. We had tech underperforming the past four months. Now it's time for liftoff. You know, again, I'm cautiously optimistic, but you know, that's my outlook until the end of the year. You know, short term we could have some chop. You know, there could be headline risk, but that's not to ignore that the long term game is not clear. You know, the S&P 500 is gonna go up. Private credit is fine. Tech is fine. You know, and I could go on and on about, you know, why they're being sold off. Ultimately, it'll be into, you know, GP, you know, CapEx risk and all this, but If it isn't, if it wasn't for that, if it wasn't for this capex build out, none of this would have been here. We'd have been flat for 5 years straight. So it's either you believe in the AI build out or you don't believe in the market. You don't believe in the market. And I'll tell you this, I believe in this. I think this will end up being good for the economy, good for you and I. Um, and it's, you know, when people say fundamentals align with technicals, you can't really put a chart, or any sort of, fib extension on the S&P 500. Doesn't make sense. But let's be quite honest. You know, are we going to expect this to come down to COVID lows? Or is that where we're anticipating 250 on SPY? Or are we just going to keep on going? It's enough for me. You guys know what I did. I bought. I anticipated this happening. I did hedge. Very small hedge. And expect some chop. Expect some chop here. As we have all these NFP levels. But other than that, that's been me. This turned into a little bit of a rant video, but it's all right. Hope you guys have a good one.